Hello and welcome to another episode of the Stock Market Today video. It's Justin Nielsen here. I'm going to be hosting for you today. Alexis Garcia is actually in the background helping us get where we need to go. And it's December 15th, 2025. And joining me is David Saito-Chung. He is a long-term friend and colleague, deputy markets editor here at IBD, and a big manager of the leaderboard product for IBD as well. Welcome to the show, Dave.
Hey, Justin, didn't I just see you earlier
I
this
know
morning?
it seems like, yeah, it seems like we've spent a few hours even though we're not in the same place, we spent a
No.
few hours looking at each other's ugly mugs today. So,
Well, hopefully we
uh,
improved as the day wore on, and great to be with you, Justin.
yeah. Of course, we're going to talk about the market and how things ended up today, but you also have a few stocks that you're going to cover. What do you got on tap?
I sure do. As usual, you asked me to give you three names, and so we're going to go with AVGO, Broadcom, which I still like to call AVGO. And we also have a biotech that was in the news today, ARGX, Argenx. And finally, we'll top it off with a metals play, Franco-Nevada, FNV.
Yeah, a lot of folks in the YouTube comments are talking about silver and gold. They're not just singing a Burl Ives song. There is a lot to be looking at in that area. But first, let's go ahead and do a breakdown of the indexes. I am sharing my screen, and you can see the NASDAQ here. We were down about 0.6% on the NASDAQ, closing not only below our 21-day moving average line, but just below the 50-day moving average line. The S&P 500 fared a little bit better. That was only down 0.2%, still hanging in there right at the 21-day moving average line. Dow Jones Industrial Average, that was only down about 0.1%, maybe even less, and just looks very different from the other indexes. There still has quite a bit of distance above its 21-day moving average line, even its 10-day moving average line. The Russell 2000 small cap index, that took a little bit more of a hit, but again, this has got a lot of space above its 21-day moving average line, coming right down to the 10-day moving average line, and still right around this area, the top of the base that it broke out of just recently. So I'm going to go back to oh, you know what? I'm going to also throw in, just for you, Dave, RSP, which is
Please
the
do.
equal weighted S&P 500. Again, a very different look from the market cap weighted indexes lately. That was up about 0.2%. And then I know you like to go with the QQQE, which is the equal weighted NASDAQ 100. That was only down 0.2%, as opposed to the 0.6% of the NASDAQ. So let's go ahead and start with the NASDAQ and get your take here, Dave.
Yeah, that was definitely the sore spot of Monday's market, right? And the fallout
Not just
from
Monday. Right.
well, for sure, and
Yeah.
and we can see that in this new test of the 50-day moving average, your red line on that daily chart, and so we're also noticing the relative strength line on your chart there dipping below two of the Webby moving averages. So that's something we need to monitor. And you highlighted the QQQE as I like to look at, but also QQEW highlighted just that the fact that the average Nasdaq 100 stock was also down. So I think Monday represented, in a quiet way, another march toward a broadening rally, or hopes that some of these non-mega cap tech sectors will continue to lead. I guess uh, bear the torch of the bull run.
Hmm. No, absolutely. And what's your take on the Russell, the RSP, and just the very different look that these have? You know, this is the Russell 2000. Actually, I'm going to go with the IWM, the iShares
Sure.
ETF, and yeah, I mean, this is exactly where you'd like to get support at the top of this base that it's formed here, and again, it still has some distance above its moving average lines.
Spot on. And today's drop doesn't really concern me much. We often see indexes, in addition to growth stocks, turning a level of resistance, which was at that around that 252 level, into a potential floor of support. And keep in mind too, I mean, just 2 days of drops in a row, is not that bad, given that you rallied 14 to 15% from that November low. So, of course, we're not going to predict what the Russell's going to do in the next coming days, but right now this pullback looks okay.
Hmm. And of course, one of the issues that a lot of investors are pointing to as just weighing down on the indexes is the cryptocurrency. Whether you're looking at Bitto, IBIT,
Hmm.
Ethereum,
Hmm.
there's some ugliness there.
There is, and I think for chart readers and people who like to sell short, I wouldn't be shorting these instruments at this point because the weakness is so obvious. But if you have another failed rally attempt to the 50-day or even perhaps to the 21-day exponential moving average for a shorter term trader, there still might be some short opportunities. And on the other hand, Justin, we definitely do not at all advise against trying to buy these dips. That can really cut your hands here.
Mhm. Yeah, it's a little bit of a different methodology than what we talk about on a regular basis. Before we get too far, and I know you're going to cover a metal stock, a gold stock, a little
Hmm.
bit later, but one of the shiny spots, if you will, was silver here. Here's the Silver Trust SLV. Um, this got hit a little bit on Friday, but still overall in a very strong uptrend. And that's kind of the case whether you look at SLV, to a lesser degree, GLD. So back to that, Burl Ives song. Platinum also having a day. That had come
Yes.
in sharply a few days ago, but has really rallied strongly lately. So what's your take on the metals here?
Well, if we if we stick with PLTM, right, that platinum tracker, I would tip my proverbial hat over to Scott St. Clair, our senior manager of premium products, who is a very popular guest on the IBD live show, and I think he was perhaps the first to maybe make the case for these precious metals ETFs, in particular PLTM. We've been looking at GLD and SLV for a long time. Justin, it feels like, well, first of all, PLTM I wouldn't chase here. If you're going to stick to some discipline rules regarding a breakout point, don't buy more than 5% above that breakout point, but also be ready for a potential second chance entry here if it does cool off, just like what the Russell 2000 is doing. If we go to SLV again, it's really interesting to see whether part of the trade is looking at silver being still relatively undervalued versus gold. A lot of people like to use that gold silver ratio, and when that gets out of sync, silver is oftentimes plays catch up and really goes really sharply. But also, I want to say that I found it interesting. Someone had noted, Justin, that even though we've hit new highs in silver on a inflation adjusted basis, we'd actually have to get up near, I think, 180, $190 per ounce for silver just to get back to those Hunt brothers trying to corner the market
Oh,
1980 rally.
yeah. Uh-huh.
Yeah. So does that mean that there's more upside? Very possibly, right? Right now, you can't argue with the strong trend of these precious metals right now.
A couple other areas to just on the downside, worth mentioning that again, you're gonna talk about a chip here with Broadcom, but chips, a lot of technology, XLK,
Hmm.
uh, very very hard hit lately, and again, is this a rotation or is this just a break for this to potentially set up for another run?
It really could be all three of the above, right? I'm not going to wager on any on my prediction because I could just be as easily wrong in saying, oh, this is just a break, or this could be the end of the era of big cap tech leading this bull run. All we have right now is, for now, just the action in the daily chart, and we do know that when you fall below the 50-day moving average, you do have to be prepared for a possibly larger correction. the
Hmm.
latest correction, right, in November wasn't as deep as what we saw in April. So, what would what would take what would it take for a bigger drop to ensue? Clearly, some kind of news that the market didn't see coming.
Yeah. Um, one other, a couple other areas of strength that I just wanted to cover briefly. XLV, very strong move here after a little handle formed on this large cup with handle. Um, you know, going back a few years. Um, so that has been rallying sharply lately. Um,
Hmm.
and a lot of the healthcare stocks. I know Lilly is a stock on leaderboard. I do have a position in this as well, or I guess it's on the watch list if I'm not mistaken.
Still on the watch
Um,
list for now, right?
yeah.
Not on the main list, but really watching it every day. I'm glad you brought
Hmm.
this one up. I don't know how much of XLV is comprised of Lilly and related names, but you can't ignore Eli Lilly at all because of its such a strong position in not only GLP weight loss drugs, but other treatments for serious diseases. And for now, I think if you own this stock and you were patient to see whether it would get support at key levels, you're being rewarded right now because it didn't really fall much below the 21 day. And Justin, if you don't mind just drawing a line across those down day, the volume on the down days,
Hmm.
uh, right, there was only one day where it even approached the 50-day average in terms of volume. So that looked like a very normal, natural, someone used likes to say that, normal,
Yeah.
natural uh, pullback. And look at those fundamentals. Earnings are incredible. And so I think the medical sector, indeed, uh, I agree with you, Justin, that this is an area to be watching for closely in the weeks and months to come.
Yeah, and Eli Lilly represents a 14.6% weight of XLV, followed number one holding there, and followed by Johnson and Johnson, which has also been looking strong lately. That has a 9% weight in number two spot for XLV. Let's go ahead and shift over to some stocks. And you wanted to start with our old friend Broadcom with the ticker symbol of AVGO. So.
Yes, AVGO. Right. I would I would venture to say that most people, if not everyone tuning in, believe that this is a real expectation breaker. You had
Mhm.
a very nice report. The the market, or at least certain fund managers, picked apart the comments made by Hock Tan and other executives during the call and found a reason to sell. And maybe it was just uh, projections that just failed to beat everyone's estimates. Maybe they were looking for more detail on the size of their biggest new clients. Regardless, the market has definitely judged the recent news as a reason to take some profits because we have a stock that clearly not only more than doubled from the April low, but it's really acted as an AI sector leader. So if you bought this stock recently, it makes sense to play defense here, and just the way that it dropped through the 50-day is very different from prior declines. Not to say that this great stocks run is over, but it feels like that it's going to need some time before it makes a really good IBD style breakout and setup.
Hmm. No, absolutely. Another one that was a little hard hit today. It wasn't all rosy cheeks in the medical space. This is a
Yeah.
biotech with some phenomenal earnings, and one that we've been watching, especially as it came out of this ascending base recently. But this was a fairly harsh break below the 50-day moving average line, though closed well off its lows.
Yes, it did, and that would give holders a reason to see how the week finishes up in the final full trading week of 2025. If it closed near the session low, Justin, I think it would have been a unanimous IBD decision based on our rules to take profits because that was it would have been the first close sharply below the 50-day in many months, and I think like for instance, you see that over in early May on the earnings that were reported, I think for Q1. You can see it went down to a low. Yeah, there we go, 529. That was such a sharp break. Even though it finished near the intraday high, it was so below all the moving averages. It made sense to take some profits. And no one, of course, had any idea that it would then have an earnings breakaway gap 3 months later. So from there, we've had a nice run. The stock acted on news that, and I believe we have a story on this as well on investors.com, that the company decided to end a late stage trial for a treatment for thyroid based eye disease. So I don't know like how much of this move since the summer was banking on some good news regarding a new treatment for a serious eye disease. But for now, I think the daily chart action show that there are some long-term investors who really want to shore up the stock, but let's keep an eye on it. Notice too that it's interesting, Justin, that I didn't notice before, but the volume was not as heavy as one might have thought on such big news. True, it was 67% above average, but that volume turned out to be less intense than the prior sell-off to the 50-day. You see that low of 749.75 in late October. That was a much heavier sell-off, but like today, it finished almost at the intraday highs of the day. So when I kind of try to decide on whether I want to trim a position or outright exit a stock, I often want to see not only a big price decline, but a huge increase in volume.
Hmm. Yeah. So yeah, 87% above average. And again, this might also uh, depend on where you bought it. Very different if you bought it down here as it was coming out of this, or even from the gap, or as it tightened up from there, as opposed to if you bought it recently. And that's one of the issues lately is recent buys. A lot of them are failing. Some of them come right back, retake their buy points, but it hasn't been easy lately, really, for October and November here. So
For sure.
where you bought definitely makes a difference. Instead of locking in profits, you might just be protecting yourself from further losses, or keeping those losses small. Let's wrap this up with a look at a one of the gold stocks, Franco-Nevada, FNV.
I frankly don't know a lot about this business. Thanks to the market surge, I can tell you right that it's dealing in the royalties and streaming uh, business of gold. But I really like how the stock has not only rebounded back above the 50-day, pattern recognition on market surge shows a cup with handle breakout. But I see it as also, given that the stock is still 13 points below that left side peak at 225.63. Justin, I would venture to guess, or even perhaps maybe anticipate a potential new handle that forms. And we've seen good examples of really great stocks that form a couple handles while
Hmm.
still fashioning the right side of that base and then break out. Notice the relative strength line is rising, but it's still not quite at its high. But there's still time for the stock to demonstrate some real relative strength. And finally, the last point, beyond the good fundamentals, beyond the strength of the industry group and the underlying gold price, notice too that you can really gain a lot of insight into a stock by looking at its past breakouts. You look at August after it reported a 65% Q2 EPS increase, it formed a nice little handle near the top of two bases. There were really two bases in one with a cup without a handle, and then one with a cup with a handle. And there you go, right? And then we had just a what looks like a perfect handle because it slanted lower along the lows, then it broke out and never looked back. We can just stay on this daily chart, and hopefully others who are more interested in doing research on Franco-Nevada, you can see back in January it had similar action. It got back above the 50-day moving average, and then it cooled off a little bit, forming a handle which was probably 5 or 6 days. You need about 5 days on a daily chart or 1 week on a weekly chart to get that final shakeout of uncommitted holders before a potential big breakout occurs. So I hope this one will work for those who are watching this, and I certainly will be watching closely for leaderboard.
Hmm. Well, really appreciate the commentary and the extra chart analysis. Very great stuff. So thank you very much for that. And will you be on tomorrow on IBD Live?
Sure will. Will
Okay,
Ed Carson,
we'll host. Right.
one of the usual suspects on SMD. He'll be hosting, but
Hmm.
I'll be paneling with David Ryan, our special guest on Tuesdays.
Yeah, we have David Ryan tomorrow. We had a special guest, Peter Borgia, today, which was a lot of fun. Someone we actually pulled from the audience, kind of situation. You had that great idea, and of course, you can watch us on IBD Live every day. We start 10 minutes before the open and go at least 90 minutes, sometimes quite a bit longer, like we did today, into the market open with analysis of the markets, current stocks, and lessons just on managing your portfolio and managing risk and all of those things. So uh, Dave is a regular panelist there, so you can catch him there at investors.com/IBD live for a trial. And then also the leaderboard product is something that he very closely watches and is involved with, along with Ken Shreve. And so that's a way to kind of get IBD methodology ideas, delivered to your inbox, your phone, however you wish to get those alerts. So a great product there. So thanks a lot, Dave, for being on the show.
Hey, appreciate it, Justin. Always a good time. Really
Uh,
appreciate it. Thank you.
Okay, and that's going to wrap it up for us today. Uh, Catch us tomorrow, and we'll be right back here after the close. See you then. Have a great day, everybody.